Hello and welcome to Big Deal. I'm Nisha Poddar. Now, while the market volatility as well as the macro concerns may have slowed down the deal street, well, there's one sector that stands out as unfazed, that is the hospital space, and there is a lot of hectic deal flow in the pipeline as well. So why is it gaining so much deal traction? Let's find out from the sector experts joining me on Big Deal today. And we have with us Kaivaan Movdawalla from Ernst & Young India, healthcare sector leader and partner, Mitesh Daga, the MD of TPG Capital, and Abhinay Bollineni, who is the CEO of KIMS Hospitals. Thank you so much, gentlemen, on joining us on CNBC-TV18. Now, let me begin first with the guests in the studio. Kaivaan, you have been looking at the overall sector, and you have looked at all the transactions as well as what are the factors that have created a shift in many dynamics. First, help us understand how has the deal flow and the traction picked up?
Sure, thanks Nisha. I think the healthcare sector has been, is and will continue to be the bastion of private equity capital in the country.
Yes.
I think the sector has drawn clearly $8 billion in investments over the last 5 years. It represents 5% of the entire private equity capital flow into the country versus sub 2% pre-COVID.
Yes.
If you look at the M&A activity itself, I think last 2 years we've seen 99 deals, again double of what it was pre-COVID. And clearly the market structure, Nisha, lends itself to consolidation. So we've got 45 to 50,000 hospitals in the country today.
Yes.
Only 3% of them are more than 100 beds
Yes.
versus 40 to 45% in the US or China. So an average of just 20 beds per entity versus 200 beds globally. And only 2% of our hospitals are NABH accredited. So clearly this is a market structure which really is ripe for consolidation.
All right, you're saying ripe for consolidation, but right now we are seeing a lot of private equity interest as well. So Mitesh, how do you see the overall setup? There are most of these, hospitals which have private equity stake already. Some of them are also bolt-on by the private equity players. And then there are some very aggressive players looking at buying out the smaller players backed by their private equity partners. So how is this all going to really manifest into bigger deals and consolidation going forward in your view?
Sure, thanks Nisha. So Kaivaan touched upon the need for consolidation in the sector.
Yes.
Another lens that might be helpful to look at is the GDP of US compared to India is roughly 7 to 8x. But if you look at the revenues of the largest hospital network in US compared to India, take a guess what it is. It's 50x, right? So that shows the level of fragmentation we have in India and the need for consolidation, because as you have larger groups, you will find them offering better quality. They will get accredited with the quality organizations, have better career path for the talent that is involved over here, and so on. So consolidation is a big theme that is coming up in the industry. You will see consolidation first happening at ground level. Individual states, regional leaders like KIMS, we have Abhinay with us, or Sahyadri in Maharashtra. You will find them consolidating single standalone hospitals or maybe smaller chains within their catchment, within their states or neighborhood states. And then you will find larger pan-India hospital chains like a Fortis or a Manipal or a Max who will be acquiring or consolidating some of these regional setups like has happened in the case of Columbia Asia, etc.
Right. So there's a lot to be done, and the regional play, and a lot of those companies are the ones which could be either consolidating or they beefing up their own position as a strong regional player. That's how we see it, but let's find out from an operator in this particular space. So Abhinay, a recent listing, not many years as a listed entity. How do you see this whole space? First of all, there have been a few additions over the last few years in the listed space, and we have seen some big transactions and a lot of private equity interest. What changed in the last few years that we are seeing so much activity in the space that you operate in?
Firstly, thank you, Nisha, for having me here. I think as an industry, the opportunity is quite big, right? So like Kaivaan put up numbers and Mitesh put up numbers, the opportunity in itself is very, very large today. So even if you look at the most of the private hospital beds are concentrated only in the larger metros or top 5 states or top 7 states even today, which is very unfortunate. And if you look at the difference in southern states to central India and northern India, the kind of bed penetration is very, very different. So in the last 2-3 years, we've seen a lot of traction in terms of the footfalls increasing to the hospitals, larger consolidations happening, insurance penetration increasing, which is helping consolidate a lot of this volume into the larger hospitals, which is itself seeing a lot of traction in terms of how the numbers are moving forward. So we believe regionally it's very important to start consolidating. And if you look at the geography that we have been operating, we have seen significant consolidation in our geography and in the neighborhood geographies, and largely because of 2-3 factors. One, we see a lot of these doctors who've been operating for 10-15 years are not now very interested in continuing to operate, or they don't have a second generation to continue to operate the facility. Hence, they want to consolidate with someone who's in the geography, who's more accessible, and who's been able to show these turnarounds well in the past. Number two, the operational challenges that are now coming up with 100 beds, 150 beds, the pressure on pricing from insurance companies. All of this is also forcing a lot of these companies to just get consolidated and be a part of a larger network.
Right. So many takeaways from there, Abhinay, and a lot has happened even after the COVID situation. So, Kaivaan, help us understand. Insurance is one aspect, and then post-COVID, the Indian Uber class at least, and maybe Tier 1, Tier 2, also looking at quality medical services. So how has that really developed, and is that one of the biggest reasons for investments coming in?
So Nisha, I think that's an excellent question, and I think traditionally, healthcare has, the investment thesis has been on the back of some really strong secular growth drivers, right? You've got a expanding disease burden, a rising middle class, unlocking of the bottom of pyramid through the social insurance. But I think post-COVID, what we are clearly seeing is a momentum shift towards what I call private organized quality beds. And so just to share some statistics, today, even in the metros, the quality bed density per 1,000 population varies anywhere from 0.4 to 1 per 1,000 population versus 2.5 to 3.5 total bed density.
Yes.
Clearly, there is a 25 to 40% demand supply gap which exists for quality beds, right? And we're seeing this shift in consumer preference towards the organized, bed segment. And testimony of that is that a lot of chains have seen a 10 to 20% growth in the complex quaternary work, manifesting in a 5 to 6% improvement in their surgical mix.
Yes.
Now, why is this happening? And there are three very clear drivers the way I look at it, Nisha. I think one, Abhinay touched upon it, is private health insurance penetration.
Yes.
We were 10% coverage in 2020. It's 15% now, which means that 80 million consumers have gotten added to the insurance pool.
That's a huge number.
A total number of 220 million, which in itself is a phenomenal number.
And the choice is then organized beds.
Is organized, single rooms,
services.
better quality care. So that's one perceptible trend. Second, I think COVID has had a psychological impact on all of us. It's really, in some way, unleashed the fear of mortality across all age groups in their active consciousness. So there's a greater sensitivity to health. People are showing more interest, taking more initiatives, more investments in their own health and well-being.
So demand is one aspect, more traction in insurance, and also I gather from some of the operators, Mitesh, and you can jump in on this, that the complexity of the services provided by some of the hospitals has improved, and therefore the margins have also improved because of the better advanced technology. Putting all this together, and given that there is some scarcity premium as well, right? How have you seen the valuation dynamics as well as re-rating for the sector, and the ask price also when you go in for investments?
Sure. So the valuation in the sector, if you look at it geographically for India, hospitals continue to trade at a significant premium to what we see in some other geographies. The reason for that is the headroom for growth that we have in India. Large, well-run hospital networks like Apollo, Fortis, Max trade at around 25 times EV by EBITDA. Smaller regional well-run hospital networks would trade in the 18 to 20 times EV by EBITDA range.
Right.
and smaller standalone hospitals would trade in the 8 to 10 times EV by EBITDA range.
Yes.
And this kind of multiple has sustained over the last decade or so, and we haven't seen much re-rating downwards, unlike rest of the public market that we have seen recently.
But are you seeing ask price being much higher, even though the equity markets are just so volatile, right?
Depends on whether I'm buying or selling. So
Well,
if I'm buying, investing, the price is definitely higher. But no, so it is, Nisha, and there is scarcity of quality assets in the
Yes, so
country.
the scarcity
and
premium.
There's a scarcity premium.
Premium, and that's what is also attracting the investors. So it works both ways.
Absolutely.
But Abhinay, you're in a good position, as you've heard both our experts here in the studio. But I want to understand, there's a lot of time, money, as well as energy that is spent on M&A. And is it easier to synergize local, regional players and beef up one company with more wherewithal for a pan-India presence? Is it easy or difficult according to you? And is it going to be easily EPS accretive? How do you see it as an operator?
So Nisha, our thought process has been very different. So I don't think in the foreseeable future you will really see a large pan-India player. We are talking about how much market share we can have in each geography that we are present in today. So we are fortunate that in Andhra and Telangana, we have a very large market share. And our thought process is we should be able to garner larger market share in lesser markets than try to be insignificant in few of the markets that we go to just to create a pan-India player position. Because the capital required to create a pan-India position is very, very large. And I don't think any of the companies today have the kind of capital that is required to create a pan-India play. So hence we decided that I think it's more lucrative or more easy to execute a regional story than to look at a pan-India story today. And when it comes to execution, the advantages are much more because you are operating in the same geography. You can bring in synergies among the clinical specialties. You have a lot of confidence among the patient pool, the clinical talent pool. You're able to attract better talent because you already have dominance in one geography. And hence, you also have a better position to negotiate with insurance companies on pricing. You're able to bring down cost to the patient. And all of this in turn helps profitability for the hospital. So we definitely see regional play as definitely a step ahead in the future just to consolidate and move things forward.
All right, Abhinay. So more regional play that you're talking about and being good at what your core competence is. But it's not just geographical divide, but it's also segment breakup in terms of the different pockets of the services that are provided by the hospital. We'll pick your brain on that and much more because it's also a heavily regulated sector. We'll talk about all that and more in the hospital space right after this short break on Big Deal. Stay tuned. Welcome back. You're watching Big Deal and we are discussing the hospital space and the hectic deal flow in this particular sector. Now, Abhinay, we were discussing the geographical play and M&A driven because of the geographies. But there is also another, segmentation that is with the services and the quality of service that is being provided. Now, what are the areas which are gaining more traction and more attractive when it comes to the M&A or investment space? And what are the areas which are growing very fast, even in terms of performance as well as demand?
Yeah, so Nisha, for us, it has always been that we are a multi-speciality hospital. So we focus on all specialties equally, but we are seeing a lot of development in the oncology space, in the gastroenterology space. A lot of these medical specialties are evolving into interventional spaces and also taking away a lot of the surgical workload. So we are seeing a lot of scope of expansion in oncology and a lot of these medical specialties taking up active intervention role moving forward.
All right. So that's also one of the important leads, Mitesh. Do you think that it's also specialty-based investment as well as consolidation, which is also taking place? How are you seeing the deal flow trend going from here?
So there are three mega trends, Nisha, that we are looking at. So one is the rise of consumerism in healthcare. Everyone is now using Dr. Google. you have a cough, you have a lot of phlegm, Google will tell you you probably have lung cancer. So that's one mega trend where consumers are coming armed with information to the doctor. Second is digital transformation.
Yes.
As it stands today, Apple Watch outsells the entire Swiss watch industry.
Wow.
Right, so that's the amount of data we are all carrying now with us.
Yes.
And third, which we alluded to earlier, is the rise of insurance in this industry, which is leading to more volumes, but also a lot more complex clinical work.
Yes.
And the way that will pan out, as we're now seeing in the developed world, in the US,
Yes.
is it will lead to value-based care, where insurance companies will pay the hospitals not for keeping the patients inside the hospital, but for keeping them outside the hospital. How does all of this combine and get into deal activity? One, you will see larger hospitals getting funded. You will see platforms getting built, which can combine all of these changes and be ready to serve the patient, not just inside the hospital, but outside the hospital,
Yes.
and in a connected way through the entire patient journey while they're sitting at home, coming to hospital, and so on.
Right.
So that's a big mega trend. That's where the deal flow will happen. You will see deal flow happening towards these platforms.
Yes.
The second aspect is the public market. So public market today, hospitals are underrepresented, right? So as a percentage of size of the industry, which is about $60 billion, the total combined market cap of all the hospital companies is about $23 billion, so about 40%. If you look at the same statistic for the pharma industry, that's about 300% compared to the 40%. So there's a lot more action to come in the public market.
Yes.
You can count on Abhinay growing his market share a lot, and you can count on a lot more companies getting listed in the hospital space.
Right, but Abhinay, I have to ask you one question while you're sitting in the hot seat. And yes, this is a great sector to be in. But, regulatory aspect has been the hot topic of discussion for a very long time. So how do you really strike the balance between the government regulations on pricing and, on the other hand, also performance for creating that stakeholder value? You're a listed entity.
Right. So on the regulatory side, Vishal, there are two things that are happening. One is, what happened 5-6 years ago was some price control on stents. But if you look at the follow-up action after that, the government has always been discussing with private players to understand how they can lower the price for the end consumer. So I don't see that as a big risk at this point in time, because there's always been bilateral dialogue. People, they're more encouraging, they're more talking to us and understanding how we can solve the problem mutually and keep it very transparent. So I don't see that as a big issue, how it was showcased 5-7 years ago when the stent fiasco happened. But the other good thing that has happened, which is driving demand up and which you will see a lot of traction in the future, is the whole Ayushman Bharat scheme. I think given the way it is designed and the way it's being executed, as and when more and more hospitals start coming up in tier 2, tier 3, either through private investments or through PPP models, you will see a lot of traction in increasing the overall supply, overall volume of utilization of the scheme moving forward. So I think that's one very good initiative by the government.
Yes, very well pointed out. And Kaivaan, this is the segment which is going to give maximum traction to the sector going forward.
Yeah, I think we as a country probably have entered an era, a glorious era, where mass healthcare should be made available for all. And while the government continues to strengthen the public health infrastructure, it is clear that the private sector will continue to be the bedrock for high-end care, particularly tertiary and quaternary care. And the sector is clearly tailoring their model for inclusion.
Yes.
And what I see is that the real transformation that we'll see in the sector is contingent on scalable, value-based models coming up. And just to give you a few examples, the way Sahyadri has dominated Pune through its workhorse model, you look at HCG, they've got market leadership in 11 non-metros and taking cancer care to the last mile. Yes. Kaveri started with in Trichy and has become a dominant South India player. Apollo is present in 15 cities.
So I see all of them either as consolidators in their own spaces or being consolidated by some of the bigger players. So Mitesh, finally, putting all the things together as an investor, how do you view it? Because in terms of risk and reward ratio and assessment, because for most of the foreign players, any sector which is heavily regulated by the government has always been a risky affair. Sure.
So we see a demand for capital in this sector. If you add up the numbers, we need at least 80 to 100 billion dollars
Yeah.
to generate enough quality capacity in the country,
Right.
which means there's a need for investment.
Yes.
Valuations are quite full in the sector, which becomes a deterrent. It's also a very capital intensive sector, so has very long gestation to generate returns.
Yes.
And for that reason and the added regulatory complexity,
Yes.
sector has been lightly regulated in the past, but increasingly getting more attention from the government for the right reasons, but it creates uncertainty for a new investor like us coming in, which makes the returns moderate in the sector. I would not say they are very high, but on the other hand, it's also a lower risk sector.
Yes.
There's a lot of private equity investment which has already gone into hospitals, and I
Yes.
believe there is no single private equity fund who has lost money investing in the hospital sector.
Yes.
So that makes it a pretty attractive risk-adjusted
And that also
reward.
gives you the confidence because of the returns parameter in the past. And you, of course, bake in these uncertainties in your dynamics while doing the valuation as
Absolutely.
well. All right. Thank you so much, Mitesh, Kaivaan, as well as Abhinay, for joining us on this riveting discussion on the hospital space, where we are likely to see a lot of deal action, and probably the largest hospital deal in the country is also set to be announced very soon. With that, it's a wrap on this edition of Big Deal. Thank you so much for watching.